Hey everyone, Jason here. In this video, I'm going to go over how to enter bull call vertical spread options in the thinkorswim trading platform. As you can see, I'm going to be using the paper money side of thinkorswim. And if you've never traded before or you're just getting started, I definitely recommend beginning with paper money. It allows you to enter trades using real data. So you get a feel for identifying trades. You get a feel for how to enter it in the platform and learning all the mechanics of that. And then it also lets you see directionally speaking how well you would have done. What I mean by direction speaking is, would your trade have been profitable or would it have been a loss? The actual money made or lost will differ a little bit with paper trading than it will with real money. So don't pay too much attention to saying like, oh, I would have made $50, $55 or something like that, because that's going to be a little bit different than real money. However, as far as it being a winning trade or a losing trade, that should line up pretty well. The way I'm going to do this is I'm going to use the trade alerts that I send out. If you're a premium member of the Antagonist, you receive these multiple times a week from me, where I go over the trades in our challenge portfolio, which is a real money portfolio that I funded. This is just an example, as you can see right here. This is not a recommendation, but this is the typical format that you will receive from me in an email. I'm going to walk through each part of this and then show you how, if you wanted to create a similar trade on your own, how you could do that with the paper money side of thinkorswim. Once you open up thinkorswim, your screen will look something like this. As you can see, they give you some money to play with. Again, this is all fake money, so there's zero risk for you. And then you can set this up any way you want. I just have some dummy information in here to have it look more realistic. I'm also going to go ahead and get rid of that side screen so we have more room on the screen. Notice that I'm on the monitor tab. When it comes time to enter your trades, you'll want to go to this trade tab here. And you can see in this space, it'll have some sort of ticker in there for you. So right now this has the Russell 2000 ETF, and then it gives you the information on the pricing, where it's moved today, so on and so forth. What you'll see though, is in this trade alert, I was mentioning SPY. So all you're going to do here is you're just going to enter in the ticker and then hit enter or return, and it will load that for you, which you can see right here. Here's the Spider S&P 500 ETF, and here's the pricing. The next thing you want to look at, again, this is a bull call spread. So what that means is that I am placing a trade because I believe that SPY will increase in price by sometime on or before the expiration date. Usually in the emails that you receive, you'll get some sort of introduction from me, an explanation of why I'm taking this trade, and then we'll spend all of our time here in the nitty-gritty of the trade details. I'll come back up to this one contract in just a minute, but let's look first here. This is the expiration date of the trade. You can see here, this lists all of our expiration dates. All you would do is just find the one that matches. So in this case, the 26th of May, and you open that up. Once this is open, you'll notice this middle section here has all of the expiry dates, which aren't going to be any different. And then over here, you can see where it says strike. These are your strike prices here. Now, the right side of the screen, we're not going to worry about, because this is all for puts. This would be if it was going to be a bear put spread, which I'll cover in another video, if you were expecting the underlying ETF or stock to go down. But this is going to be a bullish one. We're doing a bull call spread. So we're going to focus on the call part of it. So we only need to look at the left half of the screen. Now, if you look here, I'm saying that I'm going to buy this 420.09 is just a made up number I put in there. Don't worry about that, but I'll usually put the stock price in here. But this is what you do need to pay attention to. Here's where I explained what I did. I bought the call at 419, or I bought the 419 strike call, and then I sold the 420 call. So if you come over here, you can see here's the 419 and here's the 420. With thinkorswim, like any good technology, there are multiple ways that you can arrive at the same results. What I mean by that, there's multiple processes and you can find whatever works best for you. Your option chain should look something like this, where it says spread single. If that's the case, let me show you two ways that you can enter in the same trade that I have. The first way is if you just come over to here, you're going to buy. Again, you're going to buy this 419 call. So I'm going to find the 419 on the 26th of May, and then I'm going to go over into this ask column here, because that is how you'd be buying something. since this is going to be a bull call vertical spread, I'm going to right click and it's going to bring up this menu here. I will then hover over buy and it gives me all sorts of different trades that I can make. I want the vertical one. And this is by far the most common types of trades that I do within the antagonist. So if you've been a member, you're very familiar with seeing these. And I'll just click this vertical. And now it's going to enter in the information for you to review. Let's check this. I said, let's buy the 419 call. And if you come over here, this is saying buy the 419 call. And I can tell it's a buy because one, it says buy, but also the +1 here. Then I said to sell the 420 call, which is right here, sold the 420 call. If we come here, it says sell -1, and here's the 420 call. And so that's how you get your spread there. The other thing we need to check is this is saying that I did it with one contract. You, of course, can put in as many as you want, and you would change that right here. So if I hit plus, this is going to move it up to 2, 3, so on and so forth. I can also just type over it, whatever I wanted. So if I wanted 10, I could just add a 0 in here. I'm going to go back to the 1 because that's all I want. And then you can make sure when I go to this next one here, it'll confirm and send. But before we do that, we want to look at the price. If you notice, I list for you, here's what I paid. My trade cost and max loss here was $55. So that means with the multiplier, remember option contracts for 100 shares, you can see this is showing right now a price of 57 cents. Well, that would be 100 shares. So that would come out to $57. So that's a little bit more than I paid. Well, and you can see it changes all the time. It dropped back down to that 55 and now it's back. You have a choice. You can just take whatever the mid price is, which you can see right here, and it's just filling it right in there. Or since this is a limit order, that means you can put in whatever price you want. And that's the max that you will pay. So you wouldn't pay if you want to do the exact same as me, you could simply just come in here and manually change it to 55. You can also just type in any number you want. You could just come in and make that 56 or whatever you wanted. But let's say that you wanted to match it up exactly as me and you wanted it at 55. Well, you would just put that in there and the trade, even though you can see the mid price here is 57, it would not close for more than your limit order at 55. So if that's just if you wanted to duplicate what I did, which is right here, then you would simply come in here to this confirm and send, and it does exactly what the button says. It's going to allow you to confirm everything. It's going to tell you what your break-even price is for the ETF. You need it to be trading at that to break even. It's going to tell you what your max profit is. And you can see that lines up exactly with what I had in here, the 45. The reason why it's a dollar spread. So when you look at this max profit and loss, it's always going to come to $100 because it's a $1 spread. So again, if you pay $60, then your max loss would be 60 and your max profit would be 40. Since you're paying 55, that's why your max profit is 45, which is exactly what you see right here. It's going to give you your commissions that you would pay. And you can see that right here. And then it's going to tell you some more about your buying power effect and so on and so forth. Okay. It'll tell you what your account is. So if all of this looks good, then you just hit send. If you want to edit it, so let's say you come in and you're like, well, gee, I'm okay paying $2 more because I really want to get into this trade, then it's no problem. You can just come in here and then you could raise the price to, well, right now it's just changed it to, well, now back up to 57. So then we just come in here. Now notice this is now going to be your max loss of 57 because that's how much you're paying. And then it's going to need to add up to 100 as far as your max profit, which it does right here. You can see there's $43 on the max profit and 57 on the max loss. So let's just do that right now to see if we can get it to close. And then I'll show you how to set up this last part of it right here, which is just saying how we got to our profit target. Oops, my screen keeps moving all over to the profit target. And also what this means by this good till canceled order. All right. So I'm just going to send this through. And then if you come back over now to this monitor page, you can see right here that you have a working order. Oh, it just filled. So that's good. It filled right here in real time. But this working order, I have this dummy trade in here, which I'll go over in just a minute. But this is just exactly what it says. These are orders that you have placed, but they have not filled. Our SPY order that we just put in just filled. So you can tell that because it says filled orders. And then it lists for you the trade that just went through. And this is exactly what you put. We said we'd go ahead and do it at 57. So it filled at $57. When you come down to this section here, it's going to show you your actual positions. So here's our SPY trade. And if you open it up, you can see it's exactly what we talked about. So here is going to be all the legs of it. I'm going to go ahead and spread that out a little bit so you can see. So you can see you have this 419 call, which is exactly what you bought right here. And then you have your 420 call, which you sold. So here's the +1 for buying and here's the -1 for selling. So it's everything that you said. When you come in, this net liquidity, this tells you how much the trade is worth right now. So you paid $57. We're not going to worry about commissions or fees right now. And the liquidity is at $57.50 and it just went down. So you'd be hovering at a very small profit, which you can come over right here. And this tells you your P&L. So right now you're up 0.88% on the trade, and it's just going to keep fluctuating as ETF continues to fluctuate as well. All right. Now let's talk about this. Why is this my profit target? Well, the 4 days just comes from because I'm making this on May 22nd and our expiration is May 26th. So that's where the 4 days comes from. What is this profit target? 64%. Well, that's because I entered this good till canceled order for 90 cents. What that means is I'm entering in a closing order because, as you know, I'm not a day trader. I don't have time or desire to day trade. So I like to set in my orders, and that way I can go and do things outside of the computer. And so that they will then close on their own if they reach that price. So I'm going to show you how to do that right now. All you do is you just come in and you right click, create closing order. And then you're going to have this sell vertical SPY. And then this is your entire order. This is your position. It's vertical. You don't want to close the individual legs. You just want to do this big one right here. And so you would just click this and it's going to bring you back to the screen that you saw from the last time. And it's just doing the opposite. This is how it's going to close it. Now, notice I have over here though, that I had an order for 90 cents because that's my profit target. You can make yours whatever you want to be. I'm hoping that this will rise to 90 cents. And then if it does that, the way I'm getting to my 64% profit here is because I would then close it for $90, but I paid $55. So then the 90 minus 55 would give me a $35 profit. And then that profit works out to 64%. Okay. So all I'm going to do right now is just do this GTC order for 90. I'm going to come over here and I'm going to change this to 90 cents. Now notice this is a GTC order. That stands for good till canceled. So if you come over here, this TIF stands for time in force. That's talking about how long your order will stay open. If you just leave it a day, that means that at the end of the trading day, if this order has not filled, it will just cancel and go away, which is fine, except that if you really want this to stay open, then you would have to enter this every single day, which is kind of a pain. Instead, you just come in here and you change it to GTC. What that means is that this order is going to stay open until you cancel it or until after it expires and it doesn't go through. Once you put this in here, you don't have to worry about it. So if sometime later today it gets up to 90 or tomorrow or something like that, it's just going to be sitting there waiting for you. So you just do the same thing. You come in here, confirm and send, and then hit send. Now, if I come back, notice up here in my working order section, I have this SPY order that I put in right here. And then you can look at also, here's my 90 cent limit order, which I put in. You can check the progress of it by looking at the mark. That's what the current price is right now. So we're at 57.5 or 57.575. So we're a ways away from the 90 limit, which is what we expect since we just entered it. Again, you can put whatever profit target that you want, both initially and then later if you change your mind. Let's just say that you come in tomorrow or later today and you think, you know what? I actually want this to close more quickly, so I'm going to lower my profit target. No problem. You just come in here, you right click, and then you can either cancel the order directly and you can just do the same process and enter in a new order, or easier is just to hit this cancel replace order. And it's bringing you right here. And let's just say instead you want it to close at, we'll just say 85. So you can just change it right there. And then you do the exact same thing. You can confirm everything, you send it. And then it's going to cancel that order for you. And you can see right over here, it put in a new one of 85 cents. And it's just telling you up here that it canceled the order. Now, let's say that for whatever reason, SPY jumped up a bunch and you're happy right now and you just want to close that. You can just come in and you could cancel that order. Now that's going to go away completely. And you could just come in here and you could create a closing order for whatever you want it to be. If you just want to close it right now for whatever price it is, and right here, it's giving the mid price, just put the order all the way through. That's actually why I have these dummy orders in here, because I just randomly put in some trades last week just so I would have something to go over with this video right now. So you can look at this IWM trade, for example. Notice here, if I'm coming to this IWN, this was actually a put, meaning that if I open up a put here, I put a trade on expecting the ETF to go down in price. Well, in this case, it was wrong. IWN is actually up a bunch today. And so you can see it jump 1.27%. Well, look what it did to my profit and loss. Now I'm down 44% in the trade, which comes out to $21. So let's just say that you're looking at it and you say, you know what? I don't think IWM is going to come back. I'd rather just cut my losses and take my 2750 right here and live to fight another day. Well, you can see I had this IWM order already in here for the 90 cents. So I can do it one of two ways. I can just cancel this order, or I can revise it so that I can just close it right now and cut my losses. So I'm just going to come in here and I'm going to replace this order. And then instead of this 90, I'll just do it at this mid price here at 27, because I just want this to close right now and cut my losses. So I will come in here to confirm and send. It's just telling me here's the $27 that I just put, and we'll hit send. And what that will do, it is telling me that it canceled the other order and it just filled. So that's one way that you can manage these trades. You're never really locked in. You can always change the price whenever you want. And it's telling me it went ahead and it filled my order there. So I took a loss, but I cut my losses there and it's done. Here you can tell because this IWM is now showing at zero liquidity. That's how you can manage your trades. I have some other ones in here just for sample's sake. There's an Amazon one in here. I have not yet set up the closing order. That's why it's not showing up here. But if I wanted to, I would just do the same thing. I would come in here and set this. And then I would tell it, let's close this now. We'll put it 75, make sure that I change this to good till canceled, confirm and send. And then it should pop up right here. And that's how I have my order set up. Now, again, this is everything that I showed in this email. That's how you set it up, a similar trade within your own paper trading platform. Now, I did mention earlier on that there are multiple ways that you can enter these orders and whichever way works best for you. So let me show you what I mean by that. Let's just go back and we'll do an IWM one just for make it easy. And let's say you want to do the same thing. You want May 26. Now, if you recall, last time I said you would come in here, this is going to be a bull call vertical spread. I would right click on this ask, buy, and then come to vertical. And it's going to set up my order. And if you notice, it's going to cost right now, the price would be 55 cents, 54 cents. I'm just going to delete this because I'm going to show you the other ways to do it. I want you to notice here, this is a shaded area. And then this is the unshaded area. The reason why is the shaded areas are the strike prices that are in the money. The ones that are not shaded are out of the money. If you notice, almost always when I set up my trades, almost always, not all the time, but most of the time, I will be buying the call that is in the money and I'll be selling the one that is out of the money. It's kind of straddling that area right here. That's what I did here. If you notice, it comes here, buy, and then the buy, and then the vertical. And so I'm buying this 178. That's in the money. Now I know that because look here's the current price of IWI. It's 178.34. So that means that this leg is already in the money. All that means is that since it's a call, it has to be more than 178, which it is. Now notice also, I sold this call at 179. Here's the 179 strike, and this is out of the money, right? Because right now, IWM is trading at 178.30. So that call is out of the money right now. It would need to rise above 179 for it to be in the money. So almost always when I set up my vertical spreads, it's set up this way where I'm buying the call that's in the money and I'm selling the next call that's out of the money. Once you know that, that lets you set up these in a different way if you wish. If you wanted to manually hit those strike prices, so you're looking at 178, 179. So then all I'm going to do is this time I'm going to hold down the control key and then I'm going to click in here for that's the buy. And then I'm going to sell this one. And now again, if you forget, you can look underneath my cursor and notice it has the word sell. I'm still holding the control key and I just click that and it's doing the exact same thing. Buy the 178, sell the 179. And you're ending up with the exact same as the right clicking method. So that's the second way to do it. The first way is you just right click and then go over here to buy and then vertical. And then the next way is that you hold down the control key and do both. A third way is if you come up here where it says spread, single, instead you just change this to vertical. And now notice what it did with the strike prices. It removed all of your expiry dates because I already know I'm here on May 26th. And since it's a vertical, both legs have to be on the same expiration date. And it's giving you the spread here, the 178, 179. Again, that's exactly what I've been setting up. And now all I have to do is I'm going to buy the one that's in the money, this 178. You can tell it's that shaded area, the last one in the shaded area. And I would just click on this. It says buy below my cursor, and it's going to fill in everything else for me. So here it's doing exactly what it says right here. It's going to be buying one contract at 178, sell one contract at 179. Both of those are calls right there. And again, you end up with the same thing. The price has just been fluctuating, but it's the exact same trade that we set up the other way. So there's 3 different ways that you can get to the same result. You can leave this as a spread vertical, and it has all of this here. You can also just come back and you can change this back to single. You can hold down the control, or you can do this right click, buy, and vertical. The last thing I'm going to go over is you can also change these strike prices manually from here. For example, let's say that you wanted this to be more in the money. You wanted actually both legs to be in the money. You don't want to have one in the money and one out of the money. Well, in that case, what you would do is you're just going to lower this. I'm going to click on here. I'm going to change this to 177. And then I'm going to change this to 178 because now both legs are in the money. Because if you look at IWN, it's trading for over 178 right now. Now, of course, because this trade is a higher probability trade, the premium is going to go up. You're going to have to pay more for this because it has a greater chance of profitability. And that means that you're paying more. And then you also have a lower profit potential out of it. Remember, this is always going to add up to 100. So if it's going to be at 63, that means that's your max loss. Now it's to 64. So then your max profit is going to be 36, 37, whatever it is when we enter right now. We'll just go to that. So here's your max loss, it's 64. And then there's your max profit at 36. And we'll just come back here. So you can click in here and you can change it to whatever strikes you want. And that's how you can adjust those. And then this premium will adjust accordingly as well. All right, that's how you enter a bull call vertical spread. So this is a bullish trade where you expect the underlying stock or ETF to increase. And then you go from everything from the expiration date to the contracts and then the strike prices of the different legs. In another video, I will go over how to do the same thing, but on a bear put side of things. And that's where you expect the underlying stock or ETF to go down. And then I'll create a third video, which will show you what to do if you see this trade alert come in late and the stock or ETF has moved considerably. So what would you do then if these strike prices that I put are no longer in the money or out of the money? How do you adapt to that to make it your own? Usually you can get even a better price than I did, but that'll be the topic for another video. That's it for this video. If you have any questions, comment below, or if you're a premium member, send me a message on our chat or through email, and I'd be happy to help in any way I can. Thanks.